What's going on, YouTube? I'm back with another video on Market Structure 101. In this video, I'm going to show you how to take higher time frame bearish and bullish order blocks and identify them before they form on the lower time frame. Let's get right into it. Let's go. All right, first things first, guys, we need to talk about what is higher time frame. Higher time frame in this video is going to be the 4-hour time frame and higher. We will focus on the 4-hour time frame. So this will be a 4-hour time frame bullish order block and a 4-hour time frame bearish order block. Now for this example today, I'm going to show you how to get in these entries before this move happens to the upside and before this big move happens to the downside. Okay, now let's look at this example here on the line chart, and we're going to call this 2 hours distributing lower and 2 hours accumulating higher. And for this bearish example, we're going to be calling this 2 hours accumulating up to then distribute down for 2 hours. Okay, we're going to look at some live examples, but the first thing I want to show you is bullish example. We make our first break of structure here and a retest, and then we break structure here and retest in this area. Now, guys, this is going to be the 4-hour time frame. So this candle is going to be 4 hours, and this candle is going to be 4 hours. A total of 8 hours of your time is going to be required to study and backtest to see how this strategy works for you. Okay guys, so here we have our example. Right here is where I want to bring your attention to. This is the bullish order block, and I'm going to show you how you could have gotten into using hindsight, okay? So first thing you need to identify is where the support is. Why did this bullish order block form here? Because without key level, guys, you will not be able to execute this strategy. So let's go ahead and put our key level in. This is our bullish order block. And as you can see, from this low here, all the way up to this high here, this is our range that we're dealing with. Okay, we're making higher low here, okay, and we were able to generate a support because of that. All right, this is very important to understand where you are in the market to execute this strategy. Just want to make sure that we target this high first. We would remain bullish until this high, and then we would expect some sort of retracement or reversal. Okay, so let's take a look at the 5-minute time frame. All right, take a look at this line graph, and we're going to keep it very simple. From this high to this low, this will be the first 2 hours for this 4-hour candle. And from this low to this high, that'll be the next 2 hours from this low to this high on the next 4-hour candle. Okay, we distribute down into a discount to then accumulate into a premium. Why is this a significant level? Because we already saw on the 4-hour time frame, this was our generated support off of a 4-hour bullish order block. We are anticipating higher prices, so we already know what we're looking for. Now we wait for time of day. This move happened at 3 a.m. This move happened at 4:10. This move right here happened at 4:30. We create a high by 5:20 in the morning on the next open of the 4-hour candle. So now we're in a premium. We would be distributing. We're not interested in this short. We are waiting for it to come down and show us a retest of this order block. Bam, perfect. Perfect. 2 order blocks you could have played off of. It accumulates further, pulls back and retests off of this breaker block here, and then pulls up, pull back right here into the inefficiency, gone, breaks structure, generates the liquidity it needs below to then tap into this order block and skyrocket up. It's just like the line graph, guys. You wait for your breaks of structure. How many entries did we get? 1, 2, 3, 4, 5, 6, 7 entries. Yes, I can say with confidence we had 7 entries, guys, because we know that we are looking for the distribution and the accumulation of price within each 4-hour candle. We know that the first 4-hour candle was a sell down into a discount, and the next 4-hour candle was a buy up from the discount to the premium. Okay, let's take a look at a bearish example now. Take a look at this bearish order block here. Notice how it is a lower high from these candles, right? Lower high. Why did price stop here? Zoom out and take a look. There is a resistance point here. Price trades up into here and immediately pulls back. Okay, so we can anticipate that this was an attempt to trade higher. The moment we see exhaustion towards the resistance, we are now understanding that this is going to potentially be a bearish order block. As you can see, this is a further accumulation to the upside, and we would consider this a whole 4-hour candle. It's not like our bullish example where we had both sides being played on those 4-hour candles. This one is a straight 4 hours of accumulating to then break structure and distribute down. Okay, and take a look at the price action. 4 hours of just higher lows, higher highs. When we get to the top of the 4 hour that generated here, that's why the line's red, we just sell impulsively. Retailers are saying, well, you know, the market just does stuff. No, it doesn't. Nothing happens by chance. It's all predetermined, okay? So we know this based on the strategy that we're using. Accumulation, distribution, okay? Price trades up to then form a bearish order block down. Why do we know that it's stopping here? Because we found resistance off the 4 hour time frame. We have a higher time frame bias. All right, so let's talk about the first important thing, time of day. When can we get into this move? Because right now this candle opened at 5 a.m. We're not trading from 5 to 7. We're waiting for at least 7 a.m. So here we are at 7 a.m. and boom, we get a pull down into bullish order block. We're in here. From here on, you've already seen that we are trending. So every higher low, you get into the trade. And it's going to be trading into an inefficiency or an order block. This one traded right into this fair value gap, goes higher. Pulls back here, another higher low, it's still good for buys. Now at the top of the hour, you are now exiting any buys that you were in, okay? This right now, to me, would not be the move of the day. We are anticipating that when we get to this key level, that we will be dropping. Now, what I can't tell you is how hard we're gonna drop, but what I can tell you is that we will be dropping based on the resistance, okay? And that's the second thing we're looking for, key levels. We identified our key level to be here, based on the fact that this is now a lower high. So the moment that this happens, we generate on the 5-minute time frame a bearish order block and trade lower. This is the only retest you get, okay? It just pulls up into here. This is not, to me, the trade that I want you guys to be focusing on. The trade I want you to be focusing on is this one right here, okay? This one happens right in the first hour as well. You don't need to catch the whole expansion. Just try to catch the meat of it, okay? So this one happens right here. It breaks structure right here, pulls back up. You can get into it in any part of this candle, okay? What I don't want you to do is wait for this to happen and then try to get in down here, because a lot of the time you're going to get burned. Get in when it's time to get in. If you miss it, you wait for the next opportunity, all right? And that confirms rule number 3. You wait for the break of structure and you pull back and you enter. Boom, and it's gone. All right, guys? And that's as simple as it is. Okay, guys, let's do a quick recap on what we talked about today. We are using 3 rules to get into the trade. Rule number 1, time of day. You want to be getting in when the volatility is there. London session or New York session. What candles are we using? The 4-hour candle. So 1 a.m., 5 a.m., 9 a.m. Those are the times that you're going to be looking for accumulation to start or distribution to start. Okay? If you're bearish on that day, you want to see an accumulation happen. In this example that we showed today, it was an accumulation for 4 hours and then a distribution for 2 hours. All right. In the bullish example we showed today, it was a distribution for 2 hours on the first 4-hour candle and an accumulation for 2 hours. And it repeated the exact same process on the next 4-hour open candle. So what you guys need to study and backtest is how consistent are you identifying the time of day, the key levels, and the breaks of structure within each 4-hour candle. If you guys can backtest that and form a strategy, you'll be on your way to making profit today. Till next time, I'll catch you later. Peace.